The SEC approves a leveraged Microstrategy ETF. A major investment bank discloses a huge Bitcoin ETF position. And are Bitcoin whales really buying the dip? Stick around to find out on this week's Bitcoin News Update. The best Bitcoin-themed sports apparel is at hodlersofficial.com. Top quality hockey sweaters, limited edition basketball jerseys, baseball jerseys, and hats. Every piece is professionally embroidered for a world-class look to rep the world's best money. Head on over to hodlersofficial.com and use the discount code EFFECT to save 10% off of your order. Hi, I'm Nate Martin with this week's Bitcoin News Update. The SEC has approved MSTX, the first leveraged single stock ETF targeting MicroStrategy, offering 175% of the stock's daily return. Issued by Defiance ETFs, MSTX provides amplified exposure to Bitcoin, given MicroStrategy's significant Bitcoin holdings of 226,500 BTC. Defiance CEO Sylvia Jablonski highlights MSTX's unique leverage to the Bitcoin market. However, leveraged ETFs, which aim for daily returns, carry increased risks due to leverage and stock concentration. Bloomberg's Eric Balchunas called MSTX, quote, the most volatile ETF in the U.S. market. While the SEC has recently approved other leveraged single-stock ETFs, MSTX's success hinges on investor interest and MicroStrategy's performance as a Bitcoin proxy. South Korea's National Pension Service has invested $34 million in MicroStrategy, reflecting an indirect bet on Bitcoin due to MicroStrategy's substantial Bitcoin holdings. NPS, managing over $777 billion in assets, purchased 24,500 shares at $1,377 each during Q2 of 2024, which turned into 245,000 shares after the recent 10-for-1 split. The investment aligns with a global trend of institutional investors using MicroStrategy as a Bitcoin proxy, highlighting growing confidence in Bitcoin as a strategic asset. NPS also holds a significant stake in Coinbase, further indicating its interest in the crypto sector. Meanwhile, Norway's Norges Bank and the Swiss National Bank also revealed significant holdings in MicroStrategy in their latest 13F filings. Norges Bank holds more than 1.12 million MSTR shares, while the Swiss National Bank increased its stake by 60% to 466,000 shares. MicroStrategy co-founder Michael Saylor noted the company has outperformed most S&P 500 stocks since adopting its Bitcoin strategy, positioning its shares as a leveraged Bitcoin play without fees. Goldman Sachs has significantly increased its investments in spot Bitcoin ETFs, acquiring $418 million worth by Q2 of 2024. According to the recent 13F filings, the bank's largest position is a $238 million stake in BlackRock's iShares Bitcoin Trust, alongside investments in Fidelity's Wise Origin Bitcoin ETF and Invesco's Galaxy Bitcoin ETF. In contrast, Morgan Stanley reduced its Bitcoin ETF holdings from $270 million to $189 million, selling shares in Grayscale Bitcoin Trust, but maintaining stakes in BlackRock and Fidelity's funds. Hedge funds like Millennium Management and Capula Investment Management have also aggressively invested in Bitcoin ETFs, reflecting the growing acceptance of cryptocurrency as a mainstream asset class. Despite recent Bitcoin price volatility, the assumption that long-term holders are aggressively accumulating may be misleading. Although the long-term holder supply increased by 500,000 BTC since July, this reflects the transition of short-term holders to long-term status rather than new purchases. Metrics like CoinDays Destroyed suggest some large holders are selling, not accumulating. Taking into account significant transactions from Mt. Gox's wallet, which skewed the data, whale wallets holding 10,000 or more BTC have declined, indicating potential profit-taking. Meanwhile, retail investors are increasingly accumulating, adding around 60,000 BTC. Now, ETFs have stabilized selling pressure, but they haven't driven significant price appreciation. The key question remains whether accumulation will resume or if distribution continues to cap Bitcoin's potential upside. According to Real Vision analyst Jamie Couts, Bitcoin could surge 200% in its current cycle, potentially reaching six figures. Couts predicts a 2 to 3x increase in Bitcoin's value, a more modest rise compared to the 19 and 6x gains of 2017 and 2020. Couts argues that for Bitcoin to hit this target, the U.S. dollar index must fall below 101, driven by ongoing central bank liquidity injections. Currently, the DXY stands at 102.65. The Bank of Japan and People's Bank of China, which injected $497 billion into global liquidity last month, are key contributors. Couts highlights the importance of coordinated global bank actions, including those of the Federal Reserve, in boosting Bitcoin's value. That's it for this week's Bitcoin News Update. If you've enjoyed this video, don't forget to leave a like, subscribe to the channel, and turn on notifications so you don't miss our next video. See you next week.